in case you guys missed the community post, Pepsi ended up declaring a dividend raise. So PepsiCo declares $1.15 per share quarterly, which is a 7% increase from the prior dividend of $1.07 that they were paying. Ex-dividend date is June 2nd, and they will be paying out June 30th. So congrats to all the PepsiCo shareholders. And this is actually one of the companies that are expected to raise their dividend in the month of May. We still have a couple more to go. I do have a video where I go over the top companies that are expected to raise their dividend in the month of May. So check it out. I'll try to remember to add a pop-up on the top right. But yeah, congrats to all those Pepsi shareholders, especially because they raised the dividend much higher than Apple. So congrats, guys. What's up, everybody? This is Investing Sensei here to bring you episode 133 of the portfolio update. So hopefully you guys are doing awesome. I definitely am. First off, I want to thank all the mothers out there. Happy Mother's Day. Thank you for everything you do, and hopefully you have a wonderful day today. This is your day. And yeah, but in this video, I think it's gonna be a really fun video to record, because I'm gonna be going over what how the portfolio performed this week, and then we're gonna jump into the activities where I'll show you what I bought, what I sold, any dividends that came in. And we actually did get a dividend, and it was an amazing dividend. It was actually, I think it's one of my biggest dividends that I usually get, and I'm gonna show you that. So after that, I'm going to show you some really important information, especially because if I pull up the QQQ, QQQ is just an ETF that tracks the NASDAQ 100. But here, I'm going to show you the one, 6 months here. You'll see that we're down. We're in the downtrending cycle here. And I want to go over some information on what I plan to do with my portfolio. As you see that my portfolio has been going down every single week. And I'm actually not worried about it. So I'm going to show you what I'm doing in this very rough market. And I think this is where a lot of the real investors, where they shine, because it'll actually tell you if your conviction in those companies are where they're supposed to be, and if you actually understand these businesses. And it sucks seeing this, but if you think of it in a different way, this is a great buying opportunity and time to accumulate more shares, because in the long term, I'll dive into that. I don't want to get ahead of myself, but yeah, let's go ahead and go over here to the portfolio. I'm gonna show you what I actually did that, and then from there, once I show you everything on what I plan to do with in this market, I want to show you exactly how much we actually are going to be increasing this snowball. Because remember, every Sunday we come back, we see this dividend snowball continue to get bigger and bigger, because we continue to dollar cost average. Remember that we do have some goals right here, and one of those is to continue to dollar cost average $100 every single week at the minimum. Especially in this red environment, we are going to try to contribute more, especially if I have the ability to contribute more. I will definitely do that. You'll see that these are 2022 goals. I already achieved one of these, and this was all thanks to all of my subscribers. Each and one of you made this possible. You'll see that the other goal, we're trying to make $300 on average per month each quarter, which would roughly around make us $900 a quarter. And if we look at the quarterly graphs, you are seeing that this trend is going upward. So the staircase is going up and up and up. We already have the values for 2022 Q2 for the first month. We are going to be waiting for the next 2 months. I can't wait for the month of June, because that's typically my best dividend month of the quarters. So we will hopefully surpass $781.60 this next quarter, and definitely looking forward to it. But yeah, guys, by the end of the videos, we should see this much higher, and it'll be very exciting, because remember, the portfolio is just going downwards. As you saw, the QQQs, they're just going in the downwards trend, and yeah, we will see how this increase this week. But let's go ahead and get started, guys. So the portfolio currently is at $185,642.05. We actually have nothing in buying power, but if we look at the value over time and we look at the 1 week, you'll see that we're actually up 0.08%, which is about $149. And yeah, we went downwards. And if we look at the 1 month, we're actually down about 9.17%, which is about $18,000, almost $19,000. And this is this downward trend that we're seeing. And then if we look at the 1 quarter, you'll see it's been kind of volatile. We're about 9.28%, which is about 18,000, almost 19,000. And we've gone from a high of 207,000 all the way down to about 187,000, which we're actually now down at 185,000. And we went up all the way to $213,000, and now we're downtrending. And I'm gonna show you in a bit what I plan to do and what I'm doing with this market sell-off. So definitely stick around. While you're here, be sure that you're subscribed with that bell notification if you have not done so, and drop a big thumbs up on the video to help out the channel. That is all I ask in return. I provide a lot of free scripts, and hopefully that helps you like that button on the video. But on the 1 year, guys, if we look at this, we are up about 4.86%, which is about $8,343. And yeah, we're up a little bit, but the trend is still upwards. It's kind of very volatile for the 1 year. The good thing is we're up. Honestly, I wouldn't mind if we're down, because at the end of the day, we're going to continue to grow that snowball. So it doesn't matter. If we look at the overall, you'll see that the trend is going upwards, guys. This was the 2020 crash, which was downwards, but the trend is upwards. And during here, right around December, we started hitting the very volatile market where it's going all the way down, then up, then down, and now we're kind of hitting lower, lower lows. And we will see what happens, but the portfolio continues to grow, and we will continue to accumulate shares. But let's go ahead and go over here to the activities. I'll show you guys exactly what I did this week. So if we start here, this was actually May 2nd. And first one, guys, this is actually my biggest dividend I think I actually received. And this is JP Morgan. So on the 2nd of May, I got a dividend from JP Morgan of $130.55. This was, they actually pay it out, I believe, on the 31st of April. So M1's usually late by a day or two. So that's why it's showing May 2nd. But this dividend actually goes into the month of April. $130.55, guys. That is a lot for a dividend company. You'll see May 2nd, I actually did 2 buys, $60.94. And I actually did American Towers and Altria. These were the dividends. I basically just did a drip on these, and hopefully next quarter we should get even more dividends from them. So that'll be very, very awesome. And then you'll see on the 3rd, I ended up doing 1 buy of $130.55. And that was JP Morgan, guys. If we click on this, you'll see that JP Morgan basically dripped 1 full share and a little bit over a share. So how cool is that, guys? I hope that eventually I get all my companies that I own in this portfolio where they drip 1 full share at least. That would be very, very, very cool. But yeah, you see 1 full share that this dividend paid out. I guess I was able to buy 1 full share. If we look at May 5th, we did 3 buys, guys. We deposited $100, and we bought some Home Depot, $40, some $20 of JP Morgan, and then $40 of Starbucks. I will continue to buy these. I think they're pretty great companies, and I will continue to accumulate these shares. I think in the long term, we will see if these were the best choices. I think 5, 10, 20 years from now, we will be sitting in the positive. So hopefully that becomes true, and we will see. So definitely make sure you follow along with this journey as we head towards that goal. But yeah, this is on the activities, guys. I have this green button. All it does is adds up all the dividends in this page, and does a pop-up. So you guys probably already know how much we made for this week, because it's very easy, but let's just use the script because it's fun to use it. And again, I do have these scripts available for free. All I ask in return is that you subscribe with that bell notification, and you drop a big thumbs up on the video to help out the channel. But yeah, click on this button, and then you see the pop-up. We made $130.55, and that is because that is what JP Morgan paid us. But how cool is that, guys? If we had more dividends, this would have shown the accumulation of that, so that would have been really cool. But yeah, that was passive income, guys. $130 this past week. I had to do absolutely nothing. One day we will hopefully get to that point where we are able to live off of these dividends. But yeah, I think this actually brings up the next great thing that we need to talk about, and that is you know, what I plan to do in this type of market where it's been super bearish. You know, it's been in the red, and if I show you actually real quick just my holdings, you'll see that we're still up a bit. You know, unrealized gains, we're about 49%, and that is because I continue to dollar cost average, I continue to reinvest the dividends, and obviously my average price is continuing to go up over time. But you saw companies like Pepsi, we got dividend raises, guys. So how cool is that? You know, we continue to increase those yield on costs. And yeah, but first thing I want to go over just some quick definitions is, one is, what is a correction in a stock market? So what's a correction? So I'm just going over this for any new subscribers or anybody that doesn't know. Nothing more than a moderate decline in the value of a market index or the price of an individual asset. A correction is generally agreed to be 10% to 20% drop in value from its recent peak. And so this means that if a stock or an ETF drops 10% to between 10% and 20%, that is considered a correction. Let's look at what is a bear market. So a bear market is a prolonged period of a price declines in a stock or entire market, usually of 20% or more from its recent highs. So this is anything more than 20%. So first thing we're going to pull up now, guys, is the QQQ. So remember, this tracks the NASDAQ 100. If we look at the year to date, you'll see we're about 23% down, and this trend has been going downwards. Let's look at the 1 year just from the peak right here, which was right around December, which is about December 27th. And we look at this, we're down really about 23.35%, which technically this means that we are in a bear market for the QQQ or the NASDAQ 100. So we are down, we're in a correction there, not correction, bear market. We're in a bear market for this. And so this actually is very rare. We create great buying opportunities here. If you have money, you can continue dollar cost averaging here. So QQQ is in a bear market. If we look at the SPY tracks the S&P 500, and so if we look at the year to date, you'll see it's down about 13.89%. And if we look at the 1 year, just to try to get the peak of here, you'll see that it's down about 13.89%. So this one is in a correction. Remember, at 13%, so it's between 10 to 20% is a correction. SPY or the S&P 500 is technically not in a bear market yet. If we look at the IWM, which tracks the Russell 2000, so this is going to be the year to date, you'll see we're down about 18.97%. On the 1 year, guys, if we look from the all-time highs, we're down about 24.73%, which this means that we are in a bear market for the Russell 2000. So the only thing that needs to fall much more is the S&P 500, and all three indexes will be in the bear market territory. If we look at the CPI, which this is one of the things that will be coming out on Wednesday, and I think this will kind of determine how the market performs this coming week, which is the Consumer Price Index. The Consumer Price Index measures the change in prices paid by consumers for goods and services. The CPI reflects spending patterns for each of two population groups: all urban consumers and urban wage earners and clerical workers. So the CPI will be coming out on Wednesday. This is kind of a way that, you know, how you've probably noticed that everything's been getting more expensive: gas, food, everything there. So if I pull up this chart for you guys, you'll see that for March, the CPI, well I guess not March but April, CPI came out with 8.5, and that's pretty high, guys. So they will be releasing the one for well I guess this is March, but they will be releasing the one for April, and hopefully this falls, it stays at 8.5% or actually goes down more, but if it goes higher, this could continue to see that decline in the market. We will see what happens. I don't really care either way. I'm going to continue to dollar cost average into the portfolio, but I just want to give you this information so you guys are kind of aware of this. But overall here, what I plan to do is I plan to go here my holdings. You guys see all these shares that I have sorted out by most number of shares. You know, the company that I have the most shares is Apple, then followed by JP Morgan, followed by Nvidia, followed by Pfizer, and then followed by Microsoft. What I plan to do, guys, I plan to continue to accumulate these shares no matter if we're in a bear market, a correction, continue to go in upwards, or you know, it doesn't matter. I'm going to continue to accumulate these because in the long term, guys, I think that these companies will be worth way more. They're going to be more valuable and they will be more profitable. If we look at the portfolio here, just the trend upwards, you'll see that the trend is going upwards. It's definitely not a smooth ride, but it's a very bumpy ride. And remember, people, if they had not invested here, you know, even if you had invested at the peak of 2020 before the crash, you would be you would be up in the good unrealized gains for you. So definitely time in the market beats trying to timing the market. And I'm going to continue to dollar cost average, continue to accumulate these shares, because I think accumulating the shares, it's what's one of the most valuable things you can do, especially if they are blue chip companies and you expect them to be more valuable 5, 10, 20 years from now. Especially the other thing I want to show you here is if we look at the dividend payouts, you'll see that all these companies have declared dividend increases. How cool is that? You're getting awesome dividend raises for doing absolutely nothing from these companies. American Waterworks, Honeywell, Southern Companies, all these dividends continue to compound and compound. As you'll see that for the month of May, I already have some dividends coming up, and that is pretty cool, guys. Again, a lot of these companies are going to be qualified dividends, which means I get a qualified taxable, I guess, event, and I don't have to pay ordinary income on these. So that is pretty cool there. But yeah, I'm going to continue to accumulate no matter if the market's going down, up, sideways, and whatever happens, guys. But while we're here, let's go ahead and try to actually figure out how much we grew this dividend snowball. But let me know in the comment section what you guys plan to do in this bear market. I'm definitely going to continue to accumulate these shares. If we you know, continue trending downwards, it allows all the dividends, and if I actually pull this out, all these dividends that continue to pour in, they're actually going to get reinvested and actually be able to buy even more shares if the prices of these companies continue downtrending. So that's definitely great for me. When my $100 I contribute every single week, if the market's downtrending, means that I'm able to accumulate even more shares. If the market's trending upwards, it means that my $100 is actually not as powerful because you cannot buy as many shares. And so definitely I welcome all the red for us long-term investors. But yeah, guys, let's go ahead and see how much we actually you know, I guess, and see any companies that declared any new dividends, which we should see PepsiCo's dividend raise pop up. Again, I have all these scripts available for free. All I ask is that you subscribe with that notification if you have not done so already, and you drop a big thumbs up on the videos. But let's go ahead and get started over here. So you're gonna go to portfolio tools, get latest dividends. This will wipe everything and try to figure out all the new companies that declared dividends, and we will see it pop up. And there it goes, guys. Alright, guys, so it's done. As you'll see right away that Pepsi, actually the dividend increase that we just recently got, the script picked it up, and that is pretty cool. But again, we have all these dividends that are expected to be paying out in the month of May, so it'll be very, very awesome. And then you guys already see the month of June, some pretty juicy dividends that will be coming in, so definitely looking forward to it. If we go over here to settings, guys, I'm going to go ahead and delete this. We're going to jump over to personal capital, and that way we can see how much our dividend snowball grew. So I'll see you guys over there. Alright guys, so we're here at personal capital under my M1 account. You'll see this green button, click on it, and this is actually going to copy the content of your portfolio into the clipboard. Then you can jump back over, right click, paste special values only, and there we go. We are ready to go. We go over here to holdings. This is actually kind of technically like our portfolio. You'll see the Apple shares, 216 shares, and so on, and it has all these. So what we'll do is you'll click portfolio tools, you'll click on this, and this will wipe everything on the sheet and use the new values that we just pasted from personal capital. So that'll be very, very cool. So click on it, this will get wiped and that'll recalculate. We'll jump over here to the dashboard. We'll see everything recalculated. Again, all these scripts are available for free, guys. And here we go. So dividend yield, guys, it's gone up a little bit, and that is because the portfolio has gone down. If we look at the yield on cost, we're still at 2.57%. And then if yearly, we actually went up. We went up to $3,189.63 compared to $3,177.21 from last week. And that is a beautiful thing about dividend investing, guys. This is, you know, even though the market is down and the portfolio actually went down some, we actually increased our snowball. And that is what I really love about dividend investing, especially in these type of conditions. It also keeps you motivated to continue to dollar cost average and reinvest those dividends and grow that snowball. So it's awesome, awesome, awesome. But if we look at the month, you'll see we're actually making about $265.80 now compared to $264.77 from last week. We're trying to get this to $300. I think we will get this by the end of the year, and it'll be a great goal when we do achieve it. For the week, we're at $61.34. So we went up about 24 cents, so that's pretty cool there. For the day, we're making about $8.74 every single day now. So we went up about 4 cents. Hourly, we're still making 36 cents every single hour. And then hourly work wage, we're still making $1.53 per hour. This is if our portfolio was to go work a 40-hour work week. They would get paid at an hourly rate of $1.53. Long-term goal is to try to get this to minimum wage. I think we will eventually get to that point. It'll be very exciting, and seeing that journey and see how long that takes us. But this is actually all I have, guys, for you. If you stuck all the way to the very end, be sure to drop a hashtag DCA, because we're going to continue to dollar cost average into the portfolio, no matter if the market's going down, up, sideways, or, you know, not doing anything at all. But we're going to continue doing that, continue to accumulate these shares. Be sure that you subscribe with that bell notification and drop a big thumbs up on the video. I will see you guys in the next video. Take care, stay safe out there. Bye, guys.